It sounds like it is a bad news story that interest rates are going up, but I think you finished on a more uplifting note there to say this might be the last time. Is it?
Or the penultimate time. I think interest rates will go up from 3.5% to 4% tomorrow. And then, as I've been saying for quite a few months now, I think they'll peak at either 4 or 4.25% and then stay there for several months as inflation is squeezed out of the system. Of course, higher interest rates are good news for savers. A lot of GBNews viewers and listeners will have some savings. They've been getting interest on their savings, which is less than the rate of inflation for years and years and years, which, of course, means you're losing money on your savings. But a lot of people who want to get on the housing ladder, particularly younger viewers and listeners, particularly first-time buyers, as those interest rates go up, mortgage rates go up. But I think the estate agent at the end there, Toby Caulfield, was right. I don't think interest rates, the peak, is going to be anywhere near the sort of 6 or 7%, which some people were saying, just a few months ago.
Not you.
Not me.
Can we talk about the expertise of economists? Because there's a piece in the papers today about how the BBC have effectively let the public down because their economics editors aren't as clever, well, as you, Liam. Am I summing that story up correctly?
That is one way of looking at it, I guess. You may say that I couldn't possibly comment. Look, I was part of this BBC study. Tim Davie, the new Director General of the BBC, came in, and he is from a business background, and he wanted to understand complaints he was getting that business and economics broadcasting on the BBC in particular was a bit economically illiterate. And so the BBC asked me and other external economists to talk to them about what we think of the BBC's coverage. And of course, I was honest and open. Look, this is a problem that goes beyond the BBC, right? For years and years and years, I've fought to try and get more economics and business coverage on air, right? On TV, on radio, and indeed in the newspapers, because I personally think broadcasting executives at the BBC and elsewhere underestimate the demand for economics and business coverage. I go into a pub, right? And unless it's my local where they respect me, I'm mobbed by people saying, what do I do with my mortgage? What do I do with my pension? How does my kid buy a house, etc., etc. There's huge demand. The trouble is the BBC seems to have come to a conclusion that I wouldn't come to. It's come to a conclusion that higher spending isn't always seen as a good thing, right? I think we should be coming to a conclusion that higher spending and higher tax can sometimes be a bad thing.
Yeah.
Because I think that's how a lot of people, entrepreneurial people, a lot of people at the sharp end who aren't working in the public sector, think about the world. The BBC's got a sort of fundamentally different worldview than I have, which is probably why they'll never give me a job.
Well, I hope we...
And maybe another reason why they should, because they need to broaden their gene pool.
Yeah.
They need to be a bit more open to how the majority of people in the country think. The majority of the people work for the private sector.
Yeah.
The majority of people think that higher taxes are really bad because they have to pay those taxes while they acknowledge they do have to pay them.
Well, talking about how these affect real people, these interest rate hikes are going to hit those who've got mortgages. Is there anything that people can do now to be like one of those people in the pub? Is there anything people can do now to protect themselves against this increase?
Well, I actually think that I wouldn't fix your mortgage now. I mean, obviously, if you're coming to the end of a variable deal, a fixed rate deal, and you have to refix it, unless you can, conjure up some kind of bridging loan from somewhere, you're going to have to fix your mortgage again quite soon. I would actually wait, though, because I think it won't be long before interest rates are coming down.
OK.
Possibly by the end of the year. And certainly it won't be long before people are concluding that interest rates have now peaked. And once that happens, there is quite a bit of competition in the mortgage market. There is still quite a lot of panic after the Liz Truss quasi-Kwarteng budget when mortgage rates did spike.
Yeah.
But they've come down quite a lot since then.
Okay.
And now they're roughly where that if the interest rate is, the Bank of England's rate is 3.5%, you'd expect the average mortgage rate to be sort of 5.56%, because the finance industry puts its pretty big margin on. There should be more competition. And so mortgage rates will go up a little bit as interest rates go up. But I do think the outlook soon will be inflation being squeezed out the system and interest rates coming down. And it's when we expect interest rates to be coming down, that's when you want to start talking to the mortgage companies.
OK. UK annual house price growth slows to 1.1%. What are the implications of that? Well, pretty good if you're trying to get on the housing ladder, I suppose.
It's quite confusing. You know, there is growth annual, so from January last year to January this year, according to the Halifax, but house prices have actually come down a little bit since August.
Right.
They've come down on average across the country by 3.2%, which isn't really all that much when you think about it. This is important because Halifax monitors actual achieved prices. A lot of the other surveys are bids made by estate agents. So Halifax is obviously a very, very authoritative source of house price data. House prices are down about 3% since the top of the market in August. But as the estate agent Toby Caulfield was saying there in my piece from Kent, he doesn't, and I don't foresee a sort of 2008 style house price collapse, some big crash.
Really?
I do think you'll get a levelling out of house prices because the economy is slowing, because, consumers are feeling a cost of living squeeze, but people still need to move house. They still need to buy and sell houses.
Yeah, you see, I kind of suspect there might be a sense that as prices might go down this year, people are sitting and waiting to put them on the market, or to, they're not quite sure what to do.
I think people are waiting to buy because they think prices might come down. Look, in some areas where there's been too much hype, too much speculation, particularly around new builds, house prices will fall quite sharply. But we're talking about macro figures across the board. I don't personally think we're going to see some huge house price correction unless you get a proper thunderous economic downturn and a lot more unemployment, and then you get what we call distressed buyers. People literally can't afford their mortgage because they're out of work, and then they have to sell quickly and cheaply.
And that might... I can't stop looking at the hospitality industry and looking at, the guy on your film.
Well,
that's the one.
That's why we went to the Dog at Wingham. That guy is an amazing guy. He's all in, his family.
He paid himself a salary.
Well, it's not only that he hasn't paid himself a salary for months. Lots of entrepreneurs don't do that. His utility bill, Bev's gone up from 30 grand to 120 grand. It'll be 120 grand in April.
That's just not doable, is it? Liam, thank you so much.